What's up, everyone? I'm going to show you guys why I believe the Nasdaq can continue to rip to the upside over the course of the next couple weeks. I'll be diving into my ICT analysis and we'll scale from higher down to the lower time frames. Let's get straight into it. On the 2-month time frame, institutional order flow is bullish right now, meaning down close candles will act as support. So if we do extend this down close candle out over here, you can see that price broke above it, returned back down, retested it as support, then continued higher. If we extend these down close candles out in time, you can see that price breaks above them, retest them as support. Same with these down close candles. That's the basics of bullish institutional order flow. So on the 2-month time frame, that is still bullish. So we return back to this specific down close candle. It's not a coincidence that we're starting to bounce in that area. So that's an area where I'm looking to see, okay, do we get a bullish setup out of here? I'm scaling down to the weekly time frame here. And now here's where I'm looking for the 2022 ICT mentorship model on the weekly time frame. So what I'm looking for is a liquidity grab, a market structure shift with a fair value gap, and that would be a good sign to me that this is a potential bottom and we are about to rip up to buy side liquidity. So you see this old low right here. Below old lows is going to be sell side liquidity or sell stops. The reason it is sell side liquidity or sell stops is because retail traders, they're longing this move up, specifically once it starts getting into this upper portion up here. They're looking at this as a break of resistance, potentially a retest over here. A lot of stops for swing traders would be beneath these lows because retail would look at that as significant support. So the bulk of the liquidity is going to be down here. You can see smart money rips it back down into these lows. This is just a liquidity grab. So smart money is purging these sell stops before reverting it back to the upside. So checks off that part of the list right there. We have our liquidity grab inside of the 2-month order block. So that's aligned with order flow. So we get the liquidity grab. What do I look for next? I'm looking for a market structure shift with a fair value gap. So we do have that in this leg to the upside. You can see that we take liquidity, make a high, a low, then a higher high. The reason I'm labeling this the market structure shift rather than saying it's this one right here is because I'm referring to a market structure shift on a weekly time frame, and what I want to see is a fair value gap nested in that market structure shift leg to the upside. So to elaborate, I'm looking for the fair value gap, which we have right here. So if you're new to ICT, here's a quick rundown of what the fair value gap is. It's a 3 candlestick pattern. This is candle number 1. This is candle number 2. This is candle number 3. When candle number 1's high and candle number 3's low, when their wicks do not overlap, the body of the candle on candle number 2 is only traded in that area. So you see how in this rectangle, it's just the body of the candle. That's the fair value gap. When price returns back to this, right, that's an area where the market can find support at because of the underlying narrative that we took sell stops out of the marketplace. It's aligned with the higher time frame order flow. So when price returns back to this after a market structure shift, these fair value gaps are likely to act as support. See that the marketplace supports it, and now we are continuing to rip to the upside. Now, I do believe that the Nasdaq can head for 13,740.75, and the reason I believe that specific level is because above this old high is going to be buy side liquidity, and if smart money has accumulated long positions down here, they need to sell at a higher price to willing or unwilling buyers. Where can they find that? Well, above this old high. So all of the people that are thinking that the market's just going to continue to crash to the downside, specifically retail traders, the bulk of the liquidity is going to be at this high up here because that is where buy stops are resting. So short traders are going to trail their stop losses and put them above this high because it stands out. The market tends to target those levels. So think about it like this. When the market breaks lower, retail traders, their stop losses are getting triggered, specifically sell stops because retail is going long. Smart money is buying the sell stops. What they're doing here is distributing the price to the upside to do what? To offload those long positions to the buy stops. So they're selling at a higher price. They're buying at a low price, selling at a higher price. Who are they selling to? The buy stops above this high. Before we continue, if you guys enjoyed this ICT content and you would like to see more of it, I do have a Discord which you can find first link down below. I do go over day trade setups over there pretty much every day. I won't tell you where to buy and sell, but I'll tell you where I think that the market is headed. You can see that I do post pretty often here. Here was one for today at 2:15 p.m. I said I'm thinking ES just topped out at 41.40 and it can now continue down for the rest of the day, heading towards potentially that 41.23 level. And you can see by the end of the day that did get delivered. So I'm going to actually post my executions on that trade at the end of this video, so stay tuned for that. Now you may ask, how far can price move beyond that 13,740.75 level? Well, we can use the standard deviation to get an idea of how far price can rip past that. What I'm going to do is I'm going to draw a fib from this swing low to this swing high. And here are my standard deviation settings. You could pause the screen and screenshot this. I know some people just use up to the -4. I just use all of them because I've seen ICT use all of them as well. And you can see that the -2 standard deviation puts us at 13,930 even. So that's potentially a target once price rips past that level. There's a few different ways that we could draw this. We could draw it from the highest candle close here, right, to the lowest candle body. So we're just drawing it from the bodies now. Now that puts it at 13,911. So those are two different ways I draw it from this low to this high. What we could also do is draw it from this long-term low to this intermediate term high right here. And that puts it at 14,219.75. And also I just try out the bodies and see where that puts us as well. And this puts us at 13,958.5. Those are a few different ways I've seen ICT draw the standard deviation. Either of those, I'd likely shoot for the low-hanging fruit target past that buy-side objective. So I'm not going to expect for it to trade into the 14,000s when we potentially have a low 13,900 target as well. So I think once price rips past that high, it can then trade into that standard deviation. What we can now do is go onto the weekly time frame and we can look for PD arrays. So on the weekly time frame, we do have this SIBI fair value gap, which price is trading in right now. And then we also have this inversion fair value gap, which just means we're taking this buy side imbalance, sell side inefficiency fair value gap, which just means a bullish fair value gap, an old one, and we're extending that out in time. So this is a potential PD array to watch out for. I know a lot of retail is going to be bullish in this area because they're drawing levels of resistance like this. And we could see a slight rejection off of here at first, but I think a lot of stop losses and a lot of buy-side liquidity is resting above here because this was an area where the market has reacted to in the past and had a strong move down. So retail is going to think, well, it's going to react there again. So I'm thinking we break through that high. Also, when we drop down to a daily time frame, I want you guys to see this, which is very interesting. Institutional order flow, since price is targeting this high up here, is bullish. Look at these down close candles respecting price. I'm going to delete this part right here. You can see that we have this down close candle, extend that out in time. You can see that price retest that as support. Even this down close candle gets retested as real support again. The market breaks higher. This down close candle gets treated as support. You can see the market comes back down to it, continuing higher. The market comes back down to these down close candles once again, right? Acting as real support. Price breaks to the upside. These down close candles in here act as support and so on. You get the idea. As long as we're targeting higher prices, that institutional order flow is likely to be bullish. You can see if we extend this down close candle out. Recently, this was just a couple days ago, price reacted off of that level and continued higher. So ideally, we do want to see institutional order flow stay bullish on the daily time frame and continue to rip into that upper level there. That's going to be it for this video, and stick along if you would like to see my trade execution from today on the E-mini S&P 500. I do go over using these concepts on a lower time frame. You can see that I did call out the top for the rest of the day, and this was alerted to Discord members beforehand.